Yeah, having a diverse background that's steeped in both technical, geology, capital markets, finance, it's absolutely essential, I think, in the junior mining sector. I think that was one of the things that attracted me to the sector in the first place. Is I could go. I worked obviously as an investment banker. I worked with large cap companies, with a global investment bank based in Australia. We did, multiple M&A transactions with, our partner at Agnico. Learned that large cap company mentality, mostly deal with, strategic and corporate clients. So I bring that kind of mentality to, the running of a junior company, right? Which is you start with a great business plan, you have a great asset, you build a great team around it, you raise capital efficiently. And again, having the technical background, I'm a geological engineer, Colorado School of Mines. I worked in mineral exploration, petroleum exploration, hydrogeology. So on the exploration side, but also on the environmental side, I've got a background in sustainable development. I did some consulting work for World Bank. I've seen a lot of different aspects of the industry from a lot of different perspectives and formed a balanced view, right? Because at the end of the day, we're here to create value for our shareholders, but we have a lot of partners to work with, including our operating partner at Agnico, our investor base, our First Nations partners. It's a multivariate, diverse skill set that it takes, and I think I've certainly got the background, to accomplish that. Yeah, the hardest thing when I took over this company was that it did not perform in the market, and it had not performed up to the expectations not only of the investors, but importantly of our large mining partner, right? Which the vision of our joint venture partnership was this is it's a phenomenal geologic, very prospective land package with an established resource base on it. Capital was in short supply, for a long time until this recent uptick and turnaround, in our part of the industry. And so, having a large company come in, help to de-risk, validate the project, put some capital behind it. The view was that was really going to unlock the exploration potential in our mutual best interest. When I was asked by our partner to step in and be the general manager of the joint venture, that didn't allow me to go out and really just go out and promote the company, right? I had to go and evaluate the people, the projects, and the partnership from the perspective of, really fixing the joint venture, because all the things that were inherent in Maple's poor performance, that was rooted in what was going on in the ground, right? And lack of leadership and, poor governance and all those other things. So right off the bat, I learned that these were the things, the fundamental things, the building blocks of success were the things that we needed to address. We made those incremental changes, all along the way, including, cost discipline, right? That was one of the first things that you and I talked about, was making sure that, we are treating every dollar of investor capital, very scarce investor capital, certainly at that time, as if it's our own, right? And putting it into things that are going to add value for shareholders. Putting a team and attracting a team that can actually unlock the value of the asset. Coming up with a deal structure with our partner that, again, unlocks not only the value of the project, but unlocks the value of the joint venture, right? The partnership is about people, just like running a company like Maple is about people. And, if the structure is suboptimal, there are people who are working across purposes, and interests are always going to diverge, no matter how aligned two parties are. When Maple was at a 20 million market cap and Agnico was, multiple billions of dollars of, behemoth, third largest gold company in the world, there's no way that the two companies have exactly the same interests at all times, right? So, I think the most important things that we've done, again, just to tick those boxes, are, looking at when we said it was going to be reset. We didn't think it was going to happen overnight, and we didn't want it to happen overnight, because I think those overnight successes, the junior companies that, they pop up on a single drill hole, we're looking the best part of this partnership we have with our large cap mining producer is we think long term. Right, it's a 40-year operating plan that the Agnico guys operate with. Junior companies don't have that luxury because of lack of balance sheet, and I think looking quarter to quarter, drill hole to drill hole. What we tried to do was take a long view. Fix the geology, took time to do that. Fix the structure, took a year to renegotiate the joint venture agreement with Agnico. Attract the right sources of capital, Michael Gentili, Franklin Templeton. Fix the board. Mark Legault, Chris Adams, Dustin Isaacs, put a great management team together, and it's resulted in, phenomenal performance, certainly over, since we completed the reset in August, up over 300%. So, but a lot more to do, obviously. Yeah, well, the first, my partner really technically on the ground, it's Ian Cunningham Dunlop, and Ian's done a fantastic job of, we started the work, because I am technical, I came in and I actually started relocking core, working with the team that was on the ground to try to figure out, what was not going right. What was good is obviously we had a lot of data to start with, but they weren't really utilizing that data to drive better results. And when we attracted Ian to come to the company in 2024, August, there was a vision there that Ian was going to take ownership, right? I'm not an exploration geologist, right? I have that technical background, but we really do need somebody that has Ian's pedigree, started his career in the Abitibi, has managed, exploration and advanced project development, for companies ranging from, Barrick, Homestake, large companies to, the Marco Day Group, the Oxygen Capital Group, True Gold, Frontier Gold, High Gold with one of our directors, fellow directors, Darwin Green, which sold, to Contango. So he knows how to run not only good, geologically driven, fundamentally, exploration best practices, but he's a stickler like me. He's a stickler for detail. And so when we looked at, the JV had operated with a $400 per meter all-in drill cost, we set out, we kind of used that for our budgeting and said the first, program that we were going to do, inaugural program with the new team, which we completed last year, we targeted, 4 million, which was 10,000 meters at $400 per meter. We came in at 300. So those extra $100, I attribute to, Ian and the team we've built around Ian. Really, again, the best part we've done about the team, and the thing that I'm probably the most proud of our entire team. Like Ian's obviously there on the ground technically, but, our new CFO, Nick Ferber, Wilma Lee, who's our Chief Governance and Compliance Officer, Sarah Harriott, who we just brought on, in as VP of Corporate Development and Investor Relations. There's a culture of accountability and ownership, right, where we are taking the reins to try to drive the value of an asset. That's the beauty of the entrepreneurial spirit which attracted me to junior mining in the first place. And you've got a team that knows how to execute. It's a lean and mean team, but it's a team that we consistently execute. And that's obviously what I think is driving. It's the people, it's the asset that's a great quality. It's the partnerships, it's the capital that we've raised with the right types of supporters. But it is really the people that are driving the outperformance in Maple shares. Yeah, I think everything should be driven by a return on investment philosophy, right? And that to me is, what does that mean? It means when we have a drill target, you may have all the money in the world available to you, and sure, there's the old adage of, drill baby drill, right? Or shut up and drill stupid. Just keep drilling and you're going to find something. In our case, we're well endowed geologically, so there is that, you're fishing in the right lake, right? And that's really what the previous, I think, the team that we replaced, and we built a new team around the philosophy that we weren't just going to drill holes and try to hope we get lucky, right? We were going to try to have more of a predictable model, try to have something that was rooted in processing and incorporating all the data. So return on investment, before we drilled a single hole, this is one of the things I went back to our joint venture partnership and Agnico and said, listen, we don't really have a better understanding. 2 years into the joint venture, we don't really have a better understanding of what's actually driving, gold mineralization at Douay, and that's fundamental. That's a problem when you're drill targeting. We went and people could see the whipsaw of how Maple was doing its drilling, and I heard talk to a fund manager recently that said, we appreciate that you laid out a vision when you joined and you've stuck to that vision and plan. The plan hasn't changed, right? We've executed, and there's a consistency there because it was well formulated. Sure, you got to think on your feet. But what Maple was doing before was, we're doing some shallow infill holes kind of in and around the deposit. And then we said, okay, we want to prioritize more regional exploration as a joint venture. They went to go and drill 2,000 meter deep holes. What we've done is we've taken, the team has to give me a criteria for why they're drilling and prioritizing certain holes that are rooted in geology, right? All the things, the alteration, the structure, all these new interpretations, everything we put together. But then there's additional layers of filters on, are we looking for an open pit target? Are we looking for an underground target? What kinds of grades and thicknesses would merit, drilling success? How much is the hole going to cost? What's the expected value? I mean, I did go to Yale for my MBA, and I did learn about Monte Carlos, and so I do have some sophisticated, at least trying to minimize. We're going to talk about this, I'm sure. Minimize risk, right? It is a risk reward calculus in the junior industry. You got to start with great geology. Obviously, you got to have a team that knows how to execute, but you also have to know, our goal is always to lower our cost of capital, preserve balance sheet flexibility and discipline so that we can do bigger drill programs. If we just went out of the chute to try to drill 50,000 meters and just diluted shareholders, and then we didn't deliver a lot of return on that investment, that would be a very poor use of capital, right? What we've done is we've bootstrapped. We've started with, rethink the data, don't drill a single hole. I like how our partner looks at things on a per share basis. So when we restructured the joint venture, we didn't drill a single hole, but we actually added 1.5 million attributable ounces without diluting our shareholders, right? By repatriating the 50% of the JV that we didn't control. We then built on that by going and doing a value-added, 10,000 meter, 12,000 meter program, delivering material step-outs. We're expanding on it with a 30,000 meter program this year. We've got material catalysts, including resource updates and other things, in this rising gold price environment. These are the things that I believe investors are looking for, right? It is a management team that understands, that capital is, while it's more readily available today than it ever was at any point, certainly in my career. There still has to be a discipline where, for example, the other thing we do when we were offered, money on various terms on our last financings, we raised $18 million in the fourth quarter. Those were oversubscribed. One of them, the deals was upsized, but the first deal we did $5 million at 60 cents. The price was cheap, and so we had 10 million of demand. We didn't upsize at all. We didn't take any additional demand, dilute shareholders further. The $13 million deal, we had almost 20 million of demand. Again, we upsized from 10 to 13, but we're taking capital judiciously based on evaluation of the overall, holistic view of the business and how we drive value. With respect to our partner, I think having had a long history of doing deals with Agnico as a banker and as an advisor, helped because, we've done some big transactions, worked together, got to know the C-suite. That is obviously a great starting point. And, I've been with Maple since 2021, so I got to know others within the team, but I came in with an existing relationship. But I don't rest on laurels, and I don't ever view relationships as transactional. And everything is about how you're adding value, not only to the relationship, but really trying to build something that's meaning and lasting. And so, what we've done, I take what Agnico, their model. You can't deny that their disciplined approach. They're focused on long life, high margin assets in stable jurisdictions has been one of the cornerstone, the recipes for success. But one of the key things they always focused on, I think Sean Boyd himself, always said that, it starts and ends with the rocks, and everything in between is about people. And you surround yourself with good people and good things will happen. And there's a tremendous team, a top to bottom, within the Agnico organization. It dovetails very nicely with us. We're, as I said, we're, a group now that's, focused on accountability, ownership, transparency, collaboration, partnership. So we have all of that in spades with Agnico today. I think we've got a properly structured deal that's a win-win for both. But we learn from the fact that not only are they one of the best-in-class operators in the gold sector, they have a tremendous amount of local knowledge in the Abitibi, and they are investing in a lot of companies. Obviously, they're looking for that growth engine to propel them to continue to outperform in their market. What we do is we just do good work, right? We do good exploration work. We follow exploration management, site management, corporate management, best practices. We're happy. They're very gracious. We've brought in some very good shareholders. We don't act as a subsidiary of Agnico, right? So when we continue to succeed, we have a partnership that they promote our success, right? They're not looking to hold us back, for their own benefit. They really want to see what's in the best interest of the project. And in this case, I think the management change, the board turnaround. I mean, it's no coincidence that we've got Mark Legault on the board now. Mark spent 34 years with Agnico. Mark obviously knows the guys there very well, and I think they had seen kind of the track record of what we've been able to achieve during this 18-month turnaround, to see that there was a credible, leadership team, credible board, and that it could only be enhanced by having somebody that understood the sort of recipe to success that Agnico had followed to take projects from, exploration to development and into production. So I'd say it's a very, very positive, but probably stronger relationship with Agnico than we've ever had. Yeah, I think the biggest point for us and with many junior companies is that, you have always you have to start from first principles, right? If you look at the history of the sector of juniors, they typically make the most money for their investors when they find something and then they sell it, right? The juniors that, take something all the way from exploration to development and into production, they're pretty few and far between. Sometimes they work out spectacularly well. Other times there are spectacular failures, right? In this current gold price environment, where the gold price has run up so rapidly from, wasn't long ago when you and I first started working together, the gold price was at 1,800, it's now 4,600. We haven't seen massive M&A activity, although we have seen a lot of it focused in Canada for obvious reasons because of the poor performance of the Canadian dollar vis-a-vis the US dollar gold price and the relative attractiveness of Canadian ounces in the ground. So we've seen a couple M&A deals in the focus in the Abitibi, big endowments. It's similar to what Maple has. But I think that the most important thing with risk mitigation is how do we build a business that materially advances the project for, say, an operator like Agnico, right? That wants to see something, not only growing in terms of the number of ounces, but also, the quality of those ounces, right? It's not about just, higher gold price means lowering your cutoff grade, just bringing a bunch of marginal ounces into a mine plan. It's about adding ounces that, if Agnico or any other high quality company is looking at that resource, they're going to say, okay, what out of this is really mineable, right? And you're always managing, your interests, the long-term interests of the project and development with the interests of the retail, the guys that trade in and out of the stock, the guys that are looking for news flow. I think it's really important. We respect all of our shareholders, spend a lot of time talking to, both retail, high net worth, institutional, and our strategic investors. And they all have different, thoughts on how we should run the business. We don't control the gold price, right? We don't control what comes out of the ground. What we control are the processes by which we create value. And in this case, as I said, I've alluded to a couple of them already. I'll just stress it again. Good management best practices, running a team lean and mean, raising capital judiciously and spending it judiciously on things that actually add value. Those are the kind of hallmarks to, managing risk. And listen, the reality is as we drill, when we're doing a 30,000 meter program today, it's designed, it's expansionary, right? It is not just, we all looked at this project, 3 million ounces sitting at surface. Agnico, great geologists on our team, on our board, there's more ounces to find. And this is the kind of market where, you're seeing companies are saying, okay, high gold price, well, we want to sort of move it and push it in towards a production scenario because we want to get benefit of sort of taking advantage of high NPV numbers and, getting it, showing the path to cash flow and all that. You need to decide, do we think this project is going to go into production in this gold cycle, or is it something that's going to be in the next one? Right? And I haven't made a determination yet, but because we don't know how long this cycle is going to be, but we do know gold is cyclical, right? And so, you manage a business not for when gold is running, at all-time highs. We've run the business for the better part of 2 years, with gold underperforming and, capital being relatively scarce. While there is more capital, while our balance sheet is certainly has significantly strengthened, not only in terms of quantum of funds available, but also in the quality of investors. And the ones that are actually coming into the stock today are the ones that are looking at this from a real, now that we're back to the market cap that we were when I first joined the company, over $150 million. It's taken a lot of work to get us there in terms of, garnering market credibility, delivering results that are, material, showing that there's a real execution track record, sticking to a plan. So we have to balance all of those things. And as I said before, we're not putting out, press releases, for example, to move the market, right? We're educating our investor base on how we're deploying capital to advance a very high quality, prospective, gold project in a very, infrastructure rich and very attractive region. It's not going to happen overnight. But again, the goals for us are really to try to get this up to, 50 to 100,000 ounces of, 50 to 100,000 meters of expansionary drilling per year. You're going to drill, you're going to find something. I'd rather do something, that makes more sense in terms of using the model to try to do those sort of systematic step outs, right, as opposed to just taking moonshots across the property. I think it's iterative, right? It is consistent. I can't give you a time sense, and is it yearly? Is it quarterly? Certainly, we have, a chance like this end of this year where we've had, phenomenal performance. It's a chance to sit back and reflect. I wrote a shareholder letter, which I encourage everyone to read. It's up on the website. And it does reflect on what was a phenomenal year for Maple. Does it mean that our strategy has changed because the stock is up 300%? You could say in some cases yes, because certainly the quality of the funds and the types of funds that are looking at an entry point into Maple and being a part of our story, that changes when you move up the cap table and other things. But if the overall vision and the strategy is to continue to add value to a long life asset, a high perspective asset with lots more ounces to find, if the drilling, doesn't lead us to where we think it should have been, going, we do have regular technical assessment of, in real time of, what's the visual observations in core, right? Like, we're not just waiting for assay results. We're saying, did we hit zones where we were encountering them? We've got oversight, when it comes to mine site oversight, sitting drill rigs, looking at core, all the way up through the organization to, are we operating? I mean, every weekly meeting that I have with my team is about what did we talk about, what we were going to do last week? Did we achieve those objectives? What's outstanding? It's sort of setting, yearly objectives that are driven by KPIs that are going to actually move the needle for our stock, for our shareholders, but then making sure that people are accountable and if all of a sudden we encounter a new zone that seems like it's going to be indicative of something bigger, do we just say blindly we're going to just follow the plan that we had 6 months ago before we made the discovery? I mean, that's the excitement about the junior industry is the discovery potential can be not only fundamentally game changing for a share price and for people's personal fortunes and other things. It's fundamental because those kinds of discoveries they're fewer and far between, right? If you make a major discovery, it has the potential to really alter the future of a company. So while we're keeping a disciplined approach to the sort of de-risking of the project, the ounces that we have on the ground is a great starting point. Remember, this is not just a drill hole play, a moose pasture trying to poke holes, see if we have gold. We know we have gold. Right, so we do look at the plan regularly to decide, where we want to allocate the capital, where the next sources of capital are going to come from, what's the pathway and timeline to achieving, material growth in ounces and development strategies, and that's one of the reasons why instead of just trying to put out a resource update, we're doing internal engineering scoping, work to try to assess, what of these ounces in our perspective do we think are real. We've added a project finance guru onto our board ranks to really assess this from a financeability standpoint. We've added a lawyer with history at Turquoise Hill, navigating some very complex transactions with Rio Tinto. We've added, Dustin as our chairperson, focus on governance, those kinds of things. The board, when you have an active and engaged board, as we do, I'm getting a lot of questions as well. Even though the company is performing, you want people that are going to hold you accountable. I'm holding my team accountable. They're holding their direct reports accountable. We're all accountable to the shareholders, and I'm accountable to the shareholders and the board. And so, we've set it up so that, there isn't just one driver or one person driving everything. There's a very educated and experienced team with different skill sets that are helping to drive, our outperformance. Let's look at, during the reset, the restructuring of our joint venture with Agnico. I think that was a big one. You and I spent some time talking about that. The investor base, really trying to figure out, is this Agnico exiting? What's this back end right? How does this all work? And one of the reasons that I had a lot of people asking questions. Certainly the stock responded because Agnico, increased their equity ownership position, and we did, effectively swap the investment that Agnico was making at the project level for equity investment in the company. There's one of my partners there, Ian. When we added that, element of our to our stock of 100% ownership of the project, the question was also like, how are we going to drive bigger drill programs on the project, right? How are we going to raise the capital? You had Agnico, which was deep pocketed, but the idea was that this was going to unlock, bigger programs and really Maple's ability to try to drive that. And as it's proved out in the fullness of time, we raised capital on successively better terms, 18 million at the end of last year. We attracted the right kinds of investors. Now we're doing the largest drill program in the company's history, but also the largest drill program, even going back to the Agnico joint venture, right? So our drill budget for 2026 is 13 million. Agnico's total spending under the joint venture over 2.5-3 years was 12 million, right? So we've outspent, what we were doing as part of the joint venture, and doing it in the right way with the right team, with great leadership from Ian, great execution from the guys on site. But that was something at the time that, in the midst of, without the track record, right, with the poor sort of where the market had been and where the stock had performed, people kind of didn't understand it necessarily fully. I think the long-term investors did, certainly Agnico did, and people understand it today a lot better and see how it's actually benefited all of our shareholders. That's just one example. I think the great thing about having a diverse background is I get to put more of my engineer's hat on than my geologist hat. I can always put the investment banker and finance hat, capital markets. That's something I wear all the time. But I like the engineering, right? I like the thought process that, and Ian is also an engineer. We have a lot of engineers. Mark Legault is an engineer. You combine that engineering rigor with the geologists, scientific but also wide-eyed, sort of looking at the potential of what something could be. You start really honing in on what's the art of the possible, right? What can be done with all the various constraints. Engineering is always about problem solving, right? Geologists and engineers sometimes butt heads because the geologists want to keep drilling, and the engineers say, listen, we can constrain this, we can put parameters around it, we can put some economics on it, and we can start pulling something material out of the ground. I still think that our best value add as a company is going to be finding more ounces of gold and high margin ounces, high quality ounces that can attract, majors like Agnico, to something that, they need to replenish their depleting, reserve and resource bases. The best optimization of gold projects and assets like this usually come from major companies that aren't balance sheet constrained. But I like the excitement of taking a project that doesn't have, it's conceptual, it's sort of amorphous, where do we think it's expanding, all these other things, and starting to try to come up with something cohesive in terms of a mine plan. That's a challenge that I think I and the rest of the team really embraces, and we're looking forward to.